Hey guys, this is RC Peck with Ask RC, and this video is about investing in stocks for beginners. And I'm going to bring up 3 ideas that will absolutely change your life. Now, here's the thing. You can be at the beginning, day 1, you can be in day 10 or day 20th year or day 30th year, and this video is absolutely going to change the way you grow your money, you protect your money. But let's start with stock investing for beginners. So the thing I can say the most, and I'm going to break precedence here and actually jump over to another screen in a moment, but what I want to tell you is this. When you invest in the stock market, you have to see what is going on. Now, you've been taught to read information, read books, read newsletters, read research services, but it's actually being able to see the actual price, right? You want to know the price of what you're looking at. Specifically, you want to know the price direction. And the way to grow your money more effectively over the rest of your life is to understand how to read a price chart. A price chart is nothing more than the closing price of a symbol with a time range, 1 year, 2 years, 3 years, 4 years. And here's the key. Something in motion stays in motion until something of equal and opposite force pushes back against it. What that means is if the stock market is going higher, it's going to want to continue to go higher, and it will go higher until something of equal and opposite force pushes back against it. And that rarely happens. But in order to know how to filter out noise, filter out confusion, filter out news, you want to start with understanding how to read a price chart. And so let me jump over to my screen and let me show you what I mean. I'm going to use an example here. So on the screen here, you see 2 lines. You see a blue line and a red line. Now, when you're starting off, actually, I'm going to put let me do this. Let me just get a picture of me. When you're starting off, you're told to diversify. Get a little bit of this, get a little bit of that, get a little bit of this, get a little bit of that. That's a mistake. And I'm going to show you right here why that's a mistake. So before we get into that, the first thing is learn to read price charts. We're looking at a price chart right here. The blue line is the S&P 500. The red line is the European stock market via ticker symbol EZU. Okay, so notice the blue line is going up much better than the red line. Now, the blue line is the S&P 500. It's up 600% since March of 2009. That was the bottom of the last major bear market. During the exact same time period, the red line, which is the European stock market, is up only 200%. Okay, so you are absolutely going to be taught by almost everyone, if not everyone, to diversify. And what they mean is you're going to put a little bit in Europe, you're going to put a little bit in the US, you'll put a little bit in emerging market, you'll put some small cap, large cap, mid cap, and so on. That is absolutely a mistake. It's a way of slowing the growth of your money. And this proves it right here on the screen where the blue line is the S&P 500. Guys, it's still 500 stocks, so you're still safe. But when you learn to read price charts, you'll learn to stay away from the red line. Most people have 25% of their money on the red line if they're in the United States, meaning they're taught to put somewhere between 20 to 30% of their money in Europe or in international stocks. Absolute mistake. Imagine 30% of your money on the red line. That means that's 30% that's not on the blue line. And that is absolutely going to unnecessarily slow the growth of your money. So, stock investing for beginners, number 1 takeaway, absolutely learn to read price charts because the price filters out almost everything. Just imagine behind each one of these lines, there's about 700 million people. The richest 9% of the world is behind here, and they're voting. Should we go higher or should we go lower? And on this screen, since 2009, you can see the blue line's been voting, yes, go higher, yes, go higher. That happens to be the S&P 500. The red line is the European stock market. So the first big takeaway for stock investing for beginners is read price charts. The second is when you start to read them, you're going to notice that diversification is literally a tax on not understanding how to read price charts. Your money is not safer, your future's not safer, your stability is not safer, your retirement's not safer by having some of your money on the red line. And I think when you see that with your eyes, you go, yeah, that doesn't create a safer life for me. That actually creates a more unstable life for me. Now, here's the thing about investing for beginners, at least the way I think about it. You could be investing for 10 or 20 or 30 years, and most people still don't know that they're over-diversified, and they still really don't understand how expensive being over-diversified is. Okay, the third thing I want to talk about with investing, stock investing for beginners, the first was read price charts. The second is stop over-diversifying. Here's the third thing, and I touched on it a little bit at the beginning. What you're in, say, for example, the S&P 500 US domestic is outperforming. Okay, it can outperform for years and years and years and years, right? Not just a week, not just a month, and not just a quarter. On the screen here, you see the European stock market. And this is gonna be a little weird for beginners, stock market beginners. But what you see here is what's called a relative price chart. And if the black line is falling, and it's been falling since, let's just call it the beginning of 2008. So since the beginning of 2008, or the last 12 or 13 years, this is another way of seeing that Europe has been underperforming the US stock market. And so this is what's called a relative price chart. So the third thing for stock investors, for stock investing for beginners, is you want to really understand that you live in a relative world, not in an absolute world, not in a vacuum. Meaning, if price is appreciating, it's not enough to know that it's appreciating. You want to know if it's appreciating faster than your other choices, right? So if you're investing in the stock market, and let's just stay with geographic locations, you can invest US, you can invest emerging market, or you can invest Europe. Let's just say those are the three locations on the planet. Okay. Conventional thinkers will say put money in all three. And YouTube is filled with videos saying learn to diversify, learn to diversify, learn to diversify. That's absolute crap, and it's going to unnecessarily slow the growth of your money. So if you look on the screen here, you can see in this case, Europe is underperforming US. And it's been underperforming since 2008, or the last 12 or 13 years. This is so important, right? When people start off investing, they think they have to do a lot. Now notice, and I can go back to this chart, notice you didn't really have to do anything. You just had to have your money on the blue line and then know how to keep it on and know to keep it on the blue line. Now there's a lot more, but again, this is stock investing for beginners. So the three things I want to leave you are, number one, when you learn to read price charts, you're absolutely able, and let me actually get out of this screen here and just go back to see me so there's a connection. So when you're taught, or when you learn to read price charts, what you're actually learning to do early on is you're learning to filter out all the noise, all the garbage, all the crap from your brain. And you're looking at the only thing that matters, which is price. Price is the only thing that matters. It's the only thing that drives your portfolio up or down, not the PE ratio, not fundamentals, not price to sales, not enterprise value divided by EBITDA, not the Buffett indicator, but price. Price determines the size of your portfolio. So that's number one, is to learn how to read price charts. Okay. Number two, you're going to be taught immediately to over-diversify. You're going to be taught to have some Europe and have some emerging market and have some US and have some large cap and mid cap and small cap and value and deep value and growth and international growth and domestic growth and blah, 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 and on and on and on and on and on. Eventually, you're just having all these anchors because most things are probably underperforming just the S&P. So just know that you're going to be taught almost immediately to be over-diversified, and it is absolutely going to slow the growth of your money. And then the third thing, again, we're talking about stock investing for beginners, but this is good for everyone. And it is something in motion can stay in motion for longer than you can absolutely understand. And we're taught that oh, we got to do more. We got to trade in, trade out, do this, do that. And I showed you on the charts how US has outperformed Europe for the last 13 years. 13 years of just being the S&P would have given you a 600% return over if you would have had some of your money in Europe, which that would have been, well, the US did 600%, Europe did 200%. So that third or that 30% in Europe would have absolutely slowed, and let's just round it to a third. A third of your money would have been on absolutely the slow growth. You would have gotten no more stability, no more certainty, no more fill in the blank. It would have slowed the growth down of your money. Thanks so much, guys, for being on this video. And if you like this, you will love my other Ask RC videos. And please hit the like button and leave a comment if you have a question about one of the 3 things that every stock investor, beginner stock investor has to learn. And the sooner they learn it, the more their money's going to grow. Okay, thanks, guys. Again, this is RC Peck, and I'll see you on the next video.